Imagine waking up tomorrow and the dollar, the currency that has dominated global trade for nearly 80 years, is no longer the king. Sounds impossible, right? But right now, as you watch this video, a coalition of nations representing nearly half the world's population is actively working to make this scenario a reality. This isn't some conspiracy theory. This is BRICS, and 2026 might be the year everything changes. What you're about to discover will fundamentally alter how you see the global economy. Because whether you're an investor, a business owner, or someone who simply wants to understand where the world is heading, the battle between BRICS and the dollar will affect your wallet, your savings, and your future. Let me ask you something. When was the last time you questioned why oil is priced in dollars? Why international trade settlements happen in dollars? Why central banks around the world hoard dollars like treasure? The answer is simple, because that's how it's always been. But here's the uncomfortable truth. How it's always been is not a guarantee of how it will always be. The dollar's dominance didn't happen by accident. After World War II, at Bretton Woods in 1944, world leaders essentially crowned the US dollar as the global reserve currency. This gave America an extraordinary privilege, what former French finance minister Valéry Giscard d'Estaing called an exorbitant privilege. The US could print money and the world would accept it. They could run massive deficits and other nations would finance them. They could impose sanctions and cut countries off from the global financial system with the flip of a switch. For decades, this system worked. It brought stability, facilitated trade, and helped rebuild a war-torn world. But power, especially unchecked power, breeds resentment, and that resentment has been building for years. Enter BRICS. Originally just 4 countries, Brazil, Russia, India, and China, with South Africa joining later. The acronym was actually coined by a Goldman Sachs economist in 2001 as a catchy way to describe emerging market economies. But what started as a banker's term evolved into something far more significant. A geopolitical alliance with a clear mission. And that mission? To challenge Western economic dominance, to create an alternative to the dollar-based system, to rewrite the rules of global finance. Now, you might be thinking, these countries are too different. They'll never work together. And you'd be partially right. BRICS isn't some unified empire. Brazil and India are democracies. China is authoritarian. Russia is, well, Russia. Their political systems clash. Their interests sometimes conflict. But they share one powerful common denominator. They're all frustrated with a global system where one country, one currency, holds all the cards. Let's talk about what BRICS has actually been doing, because this isn't just talk. In 2014, they created the New Development Bank, headquartered in Shanghai, with $100 billion in capital. This was a direct alternative to the World Bank and IMF, institutions long dominated by Western powers. Then came the Contingent Reserve Arrangement, a $100 billion pool to help member countries facing currency crises, deliberately designed as an alternative to going hat in hand to the IMF with all its conditions and demands. But the real game changer that everyone's talking about in 2026, the push for a BRICS currency. Think about this for a moment. China, the world's second largest economy. India, projected to become the 3rd largest soon. Russia, despite sanctions, remains an energy superpower. Brazil, an agricultural and resource giant. Add to that the new members that joined in 2024, Saudi Arabia, Iran, Egypt, Ethiopia, and the UAE. We're now talking about a bloc that controls a massive share of global oil production, holds trillions in foreign reserves, and represents billions of consumers. If BRICS successfully launches a common currency, or even a coordinated system for settling trade outside the dollar, the implications are staggering. It would fundamentally challenge the petrodollar system that has been the backbone of American economic power since the 1970s. Here's where it gets really interesting. China has been quietly preparing for this moment for years. The Belt and Road Initiative? That's not just about building ports and railways. It's about creating economic dependencies and trade routes, where the yuan, not the dollar, is the preferred currency. China has signed bilateral currency swap agreements with dozens of countries, allowing direct trade without converting to dollars. They've established Yuan clearing banks across Asia, Europe, and Africa. And Russia? After being cut off from SWIFT, the Western-dominated payment messaging system, following the Ukraine conflict, they accelerated their de-dollarization efforts. They've dramatically reduced their dollar holdings, increased gold reserves, and pushed for settlement of oil and gas sales in rubles, yuan, and other currencies. When you sanction someone out of your system, don't be surprised when they build their own. Even traditional U.S. allies are hedging their bets. Saudi Arabia, the linchpin of the petrodollar system since the 1970s, has been in talks with China about selling oil in yuan. Think about what that means. For 50 years, if you wanted Saudi oil, you needed dollars. That created automatic demand for dollars worldwide. If that changes, if oil can be purchased in yuan or a BRICS currency, one of the foundational pillars of dollar dominance crumbles. But let's pump the brakes for a second. Because as dramatic as this all sounds, the dollar's position isn't built on sand. There are massive challenges BRICS faces, and we need to be realistic about them. First, trust. The dollar is trusted because of American institutions, the rule of law, property rights, and the depth of U.S. financial markets. Can you say the same about a currency backed by a coalition that includes authoritarian regimes with poor track records on transparency? Would global investors really feel comfortable parking trillions in a BRICS currency the way they do in U.S. treasuries? Second, unity. BRICS members have competing interests. India and China have border disputes. Saudi Arabia and Iran are regional rivals. Brazil's interests in South America don't always align with Russian interests in Eastern Europe. Creating a common currency requires surrendering some monetary sovereignty. Are these nations really ready for that level of integration and compromise? Third, infrastructure. The dollar's dominance is supported by centuries of financial infrastructure, banking relationships, legal frameworks, and market depth. You can't replicate that overnight. SWIFT isn't just a payment system, it's a web of trust and relationships built over decades. BRICS has alternatives like China's CIEPs, but they're nowhere near the same scale or acceptance. Fourth, the United States won't just roll over. America has both economic and military power to defend dollar dominance. They can offer incentives to allies, apply pressure to fence sitters, and use sanctions strategically. The Fed can adjust monetary policy to maintain dollar attractiveness. Washington has options. So what's actually likely to happen in 2026 and beyond? Let's separate hype from reality. Total dollar collapse? Extremely unlikely. The dollar won't disappear or become worthless anytime soon. It's still roughly 60% of global foreign exchange reserves, down from 70% 2 decades ago, but still dominant. U.S. financial markets remain the deepest and most liquid in the world. American military and political power provides a security guarantee that underlies economic relationships. But gradual erosion, that's already happening and will likely accelerate. We're moving from a unipolar dollar-dominated system toward a multipolar currency world. The dollar will remain important, perhaps even the most important, but it will share the stage with the Yuan, the euro, and potentially a BRICS currency or digital alternative. Think of it less like a king being overthrown in a revolution and more like a monarch gradually losing power to a parliament. The transition will be messy, contested, and take years, possibly decades. For 2026 specifically, watch for these developments. First, further expansion of BRICS membership. More countries, especially in the global south, will seek to join or partner with the bloc. Each addition chips away at the dollar's network effect. Second, increased trade settlement in local currencies among BRICS members. You'll see more China-Brazil trade in yuan and reals, Russia-India trade in rubles and rupees. Third, advances in central bank digital currencies, particularly China's digital yuan, which could provide technological infrastructure for dollar alternatives. You'll also see more countries building up gold reserves as a hedge against both dollar dependence and currency instability. Gold doesn't have counterparty risk. It can't be sanctioned. It's been valuable for thousands of years. When trust in fiat currencies wavers, gold shines. But here's what most people miss in this conversation. This isn't really about currencies. It's about power. It's about who gets to set the rules of the global economy. It's about whether developing nations will continue accepting a system designed in 1944 for a world that no longer exists. The dollar's dominance was based on American economic superiority after World War II, but the world has changed. China's GDP in purchasing power parity terms already exceeds America's. India is rising fast. Economic power has shifted, but the monetary system hasn't kept pace. That gap, that tension between economic reality and monetary architecture, is what's driving the BRICS challenge. So what does this mean for you? If you're an investor, diversification becomes even more critical. Don't put all your eggs in one currency basket. Consider exposure to different currencies, commodities like gold, and assets in different jurisdictions. If you're a business involved in international trade, start thinking about currency risk differently. Hedging strategies that worked for decades might need updating. If you're just someone trying to understand the world, recognize that we're living through a historic transition. The post-World War II order is evolving. The assumptions that governed international economics for your parents' and grandparents' generations may not hold for yours. The question isn't whether BRICS will completely replace the dollar in 2026. They won't. The question is whether we're witnessing the beginning of the end of unchallenged dollar hegemony. And the answer to that is almost certainly yes. This transition will create winners and losers. It will generate volatility and uncertainty, but it will also create opportunities for those who see it coming and prepare accordingly. History shows that major monetary transitions, from the gold standard to Bretton Woods to the current system, always involve disruption, but they also reshape the landscape of global power and prosperity. The dollar era isn't ending with a bang. It's ending with a gradual rebalancing of global economic power. BRICS is both a symptom and a catalyst of that shift. What happens in 2026 won't determine the outcome, but it will be another chapter in a story that will define the 21st century. The real question is, are you paying attention? Because while most people are distracted by daily news and short-term market movements, the foundational architecture of global finance is being rewired, and that will matter far more to your financial future than whatever happens in the stock market next week. The dollar's privilege was never guaranteed to last forever. BRICS is betting that forever is almost up. Time will tell if they're right. But one thing is certain. The world of 2026 is very different from 2006, and the world of 2046 will be unrecognizable compared to today. The only constant is change. And right now, that change is happening faster than most people realize. Stay informed, stay curious, and most importantly, stay prepared. Because the end of the dollar era, whether gradual or sudden, will reshape everything. If you want more real economic analysis, subscribe to the channel, like the video, and share it. Your support helps this content grow and keeps the conversation alive.